Firstly, we need to start with Bitcoin. Obviously, this is the daily chart. That's what we are seeing on the daily chart. The weekly zone of a value gap, which I mentioned yesterday, is still being held. It's being rejected on a daily close, but it does not really look bearish enough. Uh, but yeah, in previous cases as well, the rejection on the 5th of March and the previous to that was not either. So we can expect the bearish uh, nests in this price action to be still there. It's not evaporated overnight. We are still holding above this very important zone, in my opinion. Uh, and it's kind of 50-50 areas to long or short at the moment. The price action has not left the same zone for over 2 days. So since Monday morning, it's been at the same level, which is very concerning as well. So it's not clear which direction the price would go on. But my unless the 75 500 area is broken, my views will remain on the bearish side. There are logics that are supporting that as well. Uh, Obviously, the open interest stopping that is one of the things. The volume delta CVD also is one of the factors. So if we look at volume delta in from a point of view of uh, like without any buyers, it's not really picked up. It's tried pushing up. It's not really picked up anywhere. Then comes the factor, the open interest. It's right around at the top levels that we have seen previously on 4th of March and previously as well. It's not moving up. It's around a level that is quite high, but still not in a bullish kind of territory. So the bias we have, I think, remains the same. Now, moving on to Ethereum, we cannot really do anything about Ethereum after the breakout, but on Solana as well, the pattern that we shorted earlier yesterday is still there. It's not gone. It's still there, and while the level is still being rejected, you obviously can see this is very similar to this is rising wedge as well. So downside is likely, but you can see how consolidating it is, like for almost more than 48 hours, 60 hours almost, around the same level without any movement is cause for concern for anybody. So that's a very conflicting view that the price gives us. Apart from these, like we discussed, the Doge thing, uh, as I mentioned, it might not come in like yesterday, and it did not. It's still holding the same areas and all that, but it's not really up or testing that trend line that it is supposed to, or testing the lower levels around 0.95 for us to be able to get a good entry and good price action. The open interest is also dropping, volume is not there, so long biases are like difficult to form here. That remains one of the main tokens that we can talk about. We can see how the crypto market is not really trending. These assets, all of them, are not really consistent. Like 1% upside, 1% downside is not really something we can do on odds with the kind of risk that they come with generally. So I would, like I mentioned yesterday as well, be cooler on the alt side until further clarity is there. Not try to force the alt rates. What we can do is we can keep an eye on hype. Maybe possibly if we get an intraday kind of entry on hype on any of the sites, we can take. But other than that, I don't see many alts that are giving me the confidence to share like to share or recommend to enter longs or shorts based on the current price action. So Bitcoin, obviously, I mentioned that it doesn't really have to follow Bitcoin, but to some extent, this kind of consolidation has not happened in a long time. So the concentration that has been created here, it only ends in one way. I like in one of two ways, either a big upside or big downside, both of which are more or less equally probable by the price action, because we are at a resistance, which could, generally speaking, stick and take the price lower back to 67, 68 areas where the main volume starts. Point of control is there, and it would also break that resistance above 76 and at least test 80 or something areas before falling. We obviously are seeing that there is significant lack of volume that is there because the price didn't really spend much time in this area. So this is a gap area between 76 and 86. So it's difficult to say what will happen if the price does break 76 in with some force, but it will likely go up a bit more, possibly touching 79, 80 areas at least. But either of the scenarios remain equally probable, which is very difficult for us to get ahead of. And only situationally, only after the price actions develop and form, then we can make that decision. And that's why we need to keep uh, aware of the situation that we are in and not over like expose ourselves to odds which could have the same moves in a much aggressive manner. So that's why I would say, like, see, we need to see what happens with this compression that has been created in Bitcoin. That's why you need to be very careful. This is not the time to be very aggressive. This is very much protecting the capital time, in my view. So yeah, and obviously we are heading into FOMC, which is like it's hat on a hat. So it's already complex situation, and that's being like complicated more by the FOMC. So that's kind of resolves what we have on the Bitcoin side. Then comes obviously uh, gold that we have discussed. It's still around the same level. Same compression that we are seeing in Bitcoin is going on gold as well. So like I mentioned, it only ends in one way, one of two ways, like I mentioned for Bitcoin, either big upside or big downside. It's equally probable, it's equally likely, which could what could happen, and yeah, that's very difficult for us to get ahead of. Uh, Now for oil, like you're seeing, it's again not really holding the same pattern. It broke, like I mentioned, the main support that was there around 92, then jumped back within like the next candle without really testing the main support that I was looking at around this area, which is 90 to 88, which was the jump that we saw last Thursday, without having like the midweek jump that happened. That's something that we should have seen, and that's where I was looking to possibly recommend an entry. But yeah, this price action is not really very smooth either. Like you're seeing, this is a trend line that is going on to the downside for most of the week. It could break out. It could, I think, still could come to the 88, 89 areas and like head lower. Even. Then comes obviously US 30, the plan for the US 30. It's this area that we want to enter in, and yeah, that's where we are looking to enter the position. That's weekly low areas and possibly gives us enough kind of risk reward to possibly take this. But at the moment, yeah, it's still kind of being not so clear. Now GBP USD has started to pull back a bit, which is good for us if it does pull back, and if it does pull back to these areas, so the bottom areas, so the same stuff that that guy was talking about, uh, the daily price action guy, that has happened. Now, if it pulls back to this same liquidity zone and taps this entry around this area, taps any of these entries, and we can get a good stop loss entry to target, to keep the bottom here, possibly risk less, and target this. So something's wrong. Yeah, target this upside around 1.3430 as a first target. That would be very good, I think, in my view. So yeah, that's pretty much the plan, and this internal shift should give us a confirmation that the trend is kind of shifting. But overall, like I mentioned, we have to keep our eyes on the bigger picture here as well, which is not to lose the sight of the main factors that are there in the price action, which is that we are taking liquidity from this. Sorry, this is not something else. We are taking liquidity from this lower area. We are still in a very aggressive downtrend. It's still again rejecting from that today. It's not something that we could consider bullish. So we have to keep our stop losses low and below this area. So that's why I mentioned 1.3150, which is here. And that's why I mentioned the entry around this low of this FBG, the steady FBG, which has been standing since December 2025. These are the things that we have to consider, and that's why we have to be respecting the trade logic here as well. Obviously, we are seeing not much happening on USD JPY as well. Other assets like GBP JPY as well has been very cross over the week. So while keeping an eye, it's not something that has given us too much to do on this front. On the natural gas front, I don't think again it's a market that we can long, because the war really has not helped the gas and oil market. Oil obviously still holds $90 and all that, but the price action has been really bearish. And similar picture we can see in gas as well. Without much clarity and without much reason, these assets have really not been doing well. So while we know and understand that this is a long area and this is very great areas to long, etc., etc., the price action does not really support that to any extent. So that's why we cannot react to where the price is, but all actually see how the price is. So that's one of the most important things to look at, in my opinion. Now, dollar obviously broke the range area, but was not sustained there, and is has checked back. If dollar continues to correct, uh, that's really something that is going to be helpful for us in many aspects than one. But I don't think it is going to do that. I think it's likely going to take support with respect to how the FOMC is going to be, and trying to push higher around 101 and all these higher levels. If we'll also look at the patterns that it is forming, the downside has come in, but it's trying to also reverse from these highs areas. So it must not actually close back above 100. I think that's going to be something of a breach on dollar front. As long as it remains below and tries to push lower and lower, that's better for all the assets that we have. So yeah, that's about it. I think on most of these assets, the crypto thing is going to be very complicated. As yes, this is why I also am suggesting. So on the shorter time frame, we can see how Bitcoin is holding this pattern. Bitcoin, as you can see, is holding a pattern of like every time it's coming to test the lows, it has created a higher low, and higher low, and higher low, and higher low. That's not good for downside trades, and that's why we exited yesterday as well. So this is the part where we exited just before the US open. So that's something that is very concerning as well. So this range breakout is something that we have to be wary about, and not just avoid it, because it's still in our interest, better interest to short. So that's something that we have to be noticing and be clear about. Yeah, that's all. Thank you.